Hey everybody, welcome to my channel. Hope you guys are all staying safe and healthy out there. And if you're not a new subscriber and you're wondering why I'm playing this beat that I've never played before, it's actually a beat provided by one of my Discord members, Che. He requested that I put it in my weekly update video. I thought the beat was pretty dope, so I'm like, why not? Let's go ahead and put it into the video. And folks, if you guys wanted to join a community of like-minded individuals and meet people like Che, make sure to click the link in the description below and come join my Discord channel. I'm really blessed to have my community. I mean, these guys are some of the coolest, chillest people I've ever met, and it's really turned into a place where you can go to learn, to grow, and share your insights with like-minded individuals. So again, make sure you guys check out that link if you guys are interested in joining. This is the agenda for today's video. I'm gonna do my best to make these articles connect a little bit more for you guys. Number one, we have a lot of new avenues, new onboarding platforms that are making it very easy compared to previous years for institutional clients, retail clients to get exposure to crypto. And I have my own theory on where I think a lot of this value is going to end up. So I encourage you guys to watch this video in its entirety if you're interested in getting a complete picture of what I believe is going on. And if you're new to crypto, or even if you've been in the space for a long time, I'd like to ask you guys to check out my Patreon page. I do my best to return patrons a high level of value. I've said this a few times, but when you sign up for this service, you're basically hiring an industry analyst. I spend a tremendous amount of time doing research. I tend to have a very different or a very nuanced perspective on what's going on in the space. So it's a great way to sort of streamline your learning, but also get a different perspective that you're unlikely to get elsewhere. And not only do you get to talk to me directly, but you also get premium Substack access. So I send routine emails to people that sign up for the service. So throughout the week, you'll receive emails from me, giving you guys updates on DeFi platforms I'm using, centralized platforms I'm using. So by signing up and becoming one of my patrons, you're getting a lot back in return. And I don't particularly use the Patreon interface to render my services. I like to use Discord and Substack. And if you're wondering if it's worth it, I have had some people unsubscribe, although my retention rate has been very high. In fact, I recently had somebody reach out to me and say that I'm not charging enough. And I've also had an individual upgrade from the highly exclusive tier to the premium package. If this is something you guys would be interested in, I welcome you guys to click the link in the description below to come check out my Patreon page. With that, let's go ahead and dive into this video. Alright, to get this kick started, 3iQ files IPO for Aave fund to trade on Canadian Stock Exchange. On Friday, the Canadian investment fund manager of IQ Corp announced that its Aave fund has filed for an IPO with the securities regulators in all provinces and territories of Canada except for Quebec. Furthermore, its preliminary IPO prospectus has been green-lighted by a regulator. A closed-end investment fund managed by 3iQ, the other fund intends to raise a minimum of $10.75 million and a maximum of $107.5 million by issuing Class A units at $10.75 and Class F units at $10.59. And just like their Bitcoin fund, it aims to be listed on the Toronto Stock Exchange. Just like Americans use Grayscale to get exposure to crypto, I'm talking about large institutional investors. My thought is that we're starting to see this in other countries as well, and I think it's a trend that's just going to continue to grow. And for this reason, I think many of the legacy alts like Litecoin, Zcash, XRP, Bitcoin Cash, there's good reason to believe that they'll continue to rally. And in a few minutes, I'll talk about where this money is potentially going to end up. 3iQ was founded in 2012, and it currently manages the Bitcoin Fund and the Global Asset Fund. These are private funds only available to accredited investors in Canada, and they hold Bitcoin, Ethereum, and Litecoin. Their Bitcoin fund launched on April 9th and is currently listed on the Toronto Stock Exchange under the ticker symbol QBTC.U. Citadel Trust Company and Gemini Trust Company provide custody services for the product. And for all you guys that have accounts with BlockFi, in terms of a custodian and insurance provider, Gemini also renders those services for BlockFi as well. The Bitcoin Fund completed a $48 million offering in May and a $10 million offering in June. Even though I started to rotate a lot of my legacy alts into DeFi tokens, as many of you guys may know, I still hold on to some of my legacy alts because I think when new participants, whether that's retail or it's institutions, when they come into the market, it's likely that they're going to go ahead and buy Bitcoin, Ethereum, and they're going to buy a lot of the legacy alts that I mentioned earlier before they start looking at some of the DeFi tokens out there. Next up, Chainlink's newest partnership is bringing crypto adoption to mainstream gamers. For those of you guys unfamiliar with Chainlink, or maybe you guys want to learn a little bit more, I've done a full video review and I've also published a Medium article. You can check out the links in the description below. But this partnership was announced Tuesday. Blockchain platform GamerHash has said it's integrating Chainlink's data feeds for fair pricing. The gaming-focused platform is the latest firm to onboard Chainlink's Oracle services. The users can share their idle CPU, GPU for mining crypto or earning crypto rewards through playing games. GamerHash said that this decision comes after Chainlink's proven ability to secure over $1 billion in value in DeFi as the most widely used Oracle. Back in December, when I disclosed to everybody that I was going to begin dollar cost averaging into Chainlink, I had this strong suspicion that most DeFi platforms, if not all of them, were going to integrate Chainlink. We've seen exactly that happen. And part of the reason they did this was because many hackers were using the Oracle system, the price feed system, to hack DeFi platforms. And after these DeFi platforms made the shift to using Chainlink's Oracle system, we haven't heard of any attacks that have used the Oracle system as an attack vector. Coming back to this article, the announcement said that Chainlink's BTC USD price reference data will be used to calculate the profitability of providing different computational resources to the GamerHash platform. This is touted as the first integration towards a much larger goal of seeding NFT adoption in mainstream gaming community. I think many of us who follow crypto and blockchain, we can agree that NFTs are going to be huge. We know that gaming is going to be very huge. The gamers are already familiar with using online currencies, so it wouldn't be a surprise to us if we saw a lot of adoption, especially in that industry when it comes to blockchain tech and cryptocurrencies in general. The yet released gamer coin, ticker GHX token, will be issued in Malta and sold on South Korean exchanges, the announcement noted. I most likely will not be buying this token, but for any of you guys that are looking for investment opportunities, maybe you guys want to take a note of that. GamerHash said NFTs are quickly gaining momentum for innovative developers and enterprises alike wanting to capitalize on this new and relatively untapped market. The head of Chainlink Business Development echoed the same sentiment. The gaming industry is primed to see massive expansion through the introduction of in-game rewards represented as scarce NFT assets. Another benefit to integrating with Chainlink is that Chainlink's VRFs, which stands for Verifiable Random Function, allows developers to easily access and interact with oracles on Chainlink, enabling the creation of fair Layer 2 applications. This feature was launched earlier this May. Oftentimes, people characterize Chainlink as a DeFi token, and I think that's because that's where it had its initial adoption. Most DeFi platforms naturally gravitated towards Chainlink. But in reality, if we're talking about connecting off-chain data with on-chain data, this decentralized Oracle system is going to be much more ubiquitous than many people think, and it's going to penetrate a lot of different industries. DeFi gaming is just the beginning in my view. Next up, we're going to talk about Aave. Their token is the Lend token. In the interest of being fully transparent, I do own some of these tokens, as that many of my patrons and Discord members know already. They recently introduced their tokenomics. They've actually formalized a path to become decentralized and autonomous. For those watching me for a while, you guys know that I've been saying this for months. Many of these DeFi projects are going to start out highly centralized, and progressively they'll transition into becoming more decentralized and fully autonomous. And I think the reason they do this is to get around regulators, because if they hosted an ICO, they gave us tokens and they promised us a yield, they gave us a piece of the action, but the platform wasn't sufficiently decentralized, then that could be interpreted as a dividend. But by making their protocol sufficiently decentralized and also giving up a lot of the control to the community, then they're sort of in this gray area where regulators can't get them. Now, that might change as new laws come out, but for the time being, it looks like they might be able to get away with it. Where it gets tricky is with all the KYC business. But my guess is that, the protocol itself can't be censored. What they could do is prevent users from using a certain website. So to be compliant from a regulatory standpoint, any platform could integrate this protocol. They can pose a KYC on the front end, and on the back end, they could integrate this protocol, giving users access to all the services offered by the protocol. They've decided to go ahead and do a Aave token migration. And this is the first step in transitioning governance power from the Aave core team to the Aave token holder. For every 100 Lend tokens you own, you're going to be given one Aave token. So the supply is going to go from 1.3 billion Lend tokens to 16 million Aave tokens. Of the 16 million Aave tokens, 13 million are going to be redeemed by Lend holders. 3 million Aave tokens will be held in the Aave ecosystem reserve for protocol incentives. And I think this is a pretty good move because now we basically have funds in the reserve to spend on marketing, to bootstrapping liquidity, and finding other innovative means of promoting the success of the platform. The Aave ecosystem reserve will act as a bootstrap fund allocated to protocol incentive as governance sees fit. Aave holders will determine how the ecosystem reserve will be allocated between safety and ecosystem incentives. And if you're a Aave holder, you're probably going to be looking forward to the staking. Aave will be secured by a safety module, a staking mechanism for Aave tokens to act as insurance against shortfall events. Stakers earn Aave as safety incentives along with a percentage of the protocol fees. Of course, the downside here is that if your tokens are going to be acting as the insurance fund, if anything does happen, you may end up losing Aave token. But they are going to be compensating lenders more than people who borrow because they're taking on that risk. Staking will feature plain Aave alongside Aave ETH pair. The latter will leverage balancer to incentivize market liquidity and earn BAL along with trading fees. Staked Aave will be freely tradable after a cooldown period. All rewards accrue in real time and are distributed as Aave is withdrawn or transferred from the safety module. Aavenomics are fueled by governance forums and ratified through on-chain Aave improvement proposals. Using Aave, this process looks to ensure extensive discussion is had on proposals prior to being pushed on-chain. Both Aave held in cold storage and Aave staked via safety module can be used to vote for Aave improvement proposals or be delegated to Aave protocol politicians to vote on your behalf. For those of you guys who've watched my previous weekly updates, you know that VC interest is pretty strong with Aave. There's a few firms who've already invested. The nice thing about this DeFi space is that you have VC funds and retail almost on the same footing here. We both have equal opportunity to research these DeFi protocols and add exposure by buying them off the exchanges. And in part, this is why I'm so optimistic about DeFi. It'll be very interesting to see where this goes, especially where the prices will go as the interest amongst VC firms grows over the coming years. Now let's transition over to Ren VM Mainnet release. Now I'm going to go ahead and tie everything up. So in the beginning, I talked about how there's this growing interest in crypto, especially with legacy alts. And then I transitioned into talking about Aavenomics. There you learn that there's this growing interest with VC, and you also learn that VC and retail have the same opportunity to chase these DeFi projects and get exposure buying the respective tokens. And what's going to bridge the legacy alts with DeFi? In my view, I think Ren has this potential. If Ren doesn't do it, I'm sure someone else will. Users are now going to be able to convert their respective tokens, whether that's Litecoin, Zcash, Bitcoin Cash, even tokens like DGB. You're going to be able to convert them into their ERC20 synthetic equivalents. In other words, you're going to be able to take your Digibyte and these other legacy alts and interact with them on Ethereum. And if you can interact with them on Ethereum, you can interact with these DeFi apps. So think about the prospects of that. You're going to see a lot of money come into these legacy alts. Then you have this bridge, so to speak, that's going to allow you to take those alts and trade them on DeFi platforms. Imagine how much value that's going to bring to the DeFi ecosystem. If you look at the current value locked, it's 3.91 billion. If you're able to tokenize any asset and bring it into the Ethereum ecosystem, just think of the implications of that. On one hand, you have assets that are appreciating significantly in value, and on the other hand, you have an entire ecosystem that's going to be hosting these assets. So in the coming years, I could see this 3.91 billion just skyrocket. And my feel is that as these assets go into the DeFi space, you're going to see some rotation. You're going to see people that have seen their investments balloon rotate into DeFi tokens. I haven't sold all my DeFi tokens, but in anticipation of this happening, I have done a considerable amount of rotation. I was just talking to one of my patrons today, and one thing that really appealed to him was the fact that you don't have to do KYC to access these platforms. And that in itself was pretty compelling. And we also talked about the rates and some of the feature richness of DeFi platforms. If DeFi platforms are offering the services that they're offering today, it's only going to get better as they iterate. So take a step back and think about that. No KYC. I'm sure many of you guys know what the implications of that is. And secondly, you're able to get larger returns and get more services rendered. So when you connect the dots, you can really see how this space is going to be very transformative, and you're going to see a lot of value flow into it. Coming back to Ren's mainnet, anyone can now use real Bitcoin, Bitcoin Cash, and Zcash on their favorite DeFi applications. It allows you to trade, lend, and leverage these assets as you would with any ERC20 token. We've talked about how Digibyte is going to be coming to DeFi, but you also have Bitcoin that's been on DeFi for quite some time now. And now you're beginning to see it integrated on various DeFi exchanges like Hybrid Network. And I think that's the trajectory of most tokens. First, they'll get converted to their Ren equivalents, their synthetic equivalents, and then slowly but surely, you'll see the very popular tokens get integrated on various DeFi platforms. My guess, it's probably going to be the DEXs to begin with, and eventually they'll make their way into the other DeFi protocols. In terms of their core plans, in the short term, they're going to focus on integrations, incentivizing liquidity, and continuing to ensure that Ren VM is safe and secure. Here's an example of what they mean by incentivizing liquidity provision. This is something that I'm participating in by converting my Bitcoin into the synthetic versions of it and being a liquidity provider. They're going to give me free synthetics tokens, free curve tokens, free Ren tokens, and also free balancer tokens. In my view, I know that liquidity mining is just a short-term solution. It's transient. You'll see people go ahead and deposit their respective assets. Once the promotion or incentive phase is over, they'll go ahead and remove their assets off the platform. But I'm pretty optimistic. I think eventually these guys will come up with better models, means to retain the liquidity that they've generated with these incentives. But to be honest with you, even if it's short term, it's going to get a lot of people involved that weren't involved in DeFi to begin with. It's going to bring people from various communities together. For instance, I would imagine there's a lot of people in the Digibyte community that haven't played with DeFi yet. And if these guys teamed up to offer pretty lucrative incentives, it may compel people to take some of their DGB and play around with DeFi. Yeah, I understand the criticism that, it's a short-term solution that they're just going to go ahead and remove it on, but at least it introduces people to DeFi. They get a sense of what synthetics are. They get a good sense of what DeFi has to offer. And sure, many people may not stick around, but you'll get some people that normally wouldn't have touched DeFi play around with it and maybe even stick around. For instance, I had a buddy who never played with synthetics. He never converted his Bitcoin into Ren BTC or WBTC, but because of the incentive offered by Ren, Curve, and synthetics, he decided to try it out just to see what kind of return it would produce. And afterwards, he decided to make some allocation shifts in his portfolio as well. He decided to go ahead and get some DeFi exposure because after using some of the platforms, after understanding DeFi a little bit more, he became more optimistic about the prospects of DeFi. He saw the true potential that it could offer. The token of the week is Meta, ticker MTA. It has a market cap of 18 million. And when it came out, it hit a high of $6.50. It's currently sitting on $5.50. It's basically MStable's platform token, just like Lend Token is with the Aave platform. Before I go into the tokenomics and go over the value proposition for the token, let's talk about what the platform actually does. MStable MUSD addresses both the fragmentation of USD peg stablecoins and the lack of native yield by uniting stablecoin swapping and lending. So in other words, MUSD is like a basket of various stablecoins, whether that's USDC, USDT. It basically takes these various stablecoins, pulls them together, and your claim on any one of these is the MUSD. But it's actually a little bit more than that. Not only is it backed by USD pegged stablecoins, but it also has a built-in yield generator from mstable swap fees and lending collateral on Compound and Aave. But to be more accurate, MUSD is more like a LP share, a liquidity provision share in a dynamic pool of assets that generates a yield and offers a zero slippage for swaps between its underlying assets and serves as a first-class asset. So let me try to filter and condense that for you. So let's say you wanted to mint some MUSD. To get your MUSD, you need to deposit USDT, USDC, TUSD, or DAI into the mstable protocol. For instance, if you put in 1,000 USDT, you'll be given 1,000 MUSD. You can also send multiple different stable coins. They have this multi-mint feature, but the point is you're going to get a 1-to-1 ratio of the stable coins that you put into the mstable protocol. Once it's deposited, all the assets in the pool will be dynamically shifted around through the various protocols that are out there like Compound and Aave. It'll generate a yield, and by owning the mstable coin, you'll be eligible to receive some of that yield. So just to make sure you guys understand what I'm saying, imagine you putting in $1,000 worth of DAI. In return, you're gonna get 1,000 MUSD. This pool that you put the DAI into is going to take all those stable coins, put them in various lending platforms to optimize the yield. And if you take the weighted average of all of the yields, the protocol will then average out what the yield is across the various protocols that the USD is being lent out to. And everybody who owns that MUSD will be eligible for that yield. And what do you get if you hold the MTA token? Well, you'll have governance rights. You'll be able to vote on protocol proposals. For example, you'll be able to vote on whether to add or remove mstable assets, add or remove basket of assets, adjust the max weightings of basket assets, change swap fees, change MTA staking rewards, and revenue take. And on top of governance, by staking your MTA tokens, you also get some of the fees that are generated by the platform. And the reason that they're giving you those fees is because you're taking on risk. The staked MTA tokens act as an insurance fund in case anything happens to the funds that are stored on the protocol. So in that regard, it's very similar to Aave. And currently there's this incentive going on. If you wanted to earn MTA tokens for free, you just follow these steps, put your funds in the balancer pool. That's one way for you guys to earn a yield, but also earn free MTA tokens. There's about 20 million tokens, that's 20% of the MTA's token supply, that will be emitted via ecosystem rewards over the next 5 years to bootstrap mstable and promote fairer, wider distribution of MTA tokens. And you guys, this is probably going to be just the beginning, because if you can create MUSD and this works successfully, there's no reason why they couldn't make a Bitcoin equivalent, they could make a Great Britain pound equivalent, a euro equivalent, or a gold equivalent. And if you remember, the market cap is only 19 million. Relative to other projects, this is a very low market cap for a DeFi project. Well, that pretty much wraps up this week's edition of the weekly crypto update. If you guys enjoyed the video, make sure you guys give me a like. I'd love to hear your insights in the comment section below. And if you're not a subscriber already, make sure you guys subscribe. This is CryptoOneStop signing out. I'll talk to you folks next time. Bye.